Stop what you're doing. Put the phone down. Pause everything else. Because what's unfolding this morning is not a market story. It's not about oil. It's not even about war. What you are witnessing right now, Monday, April 13th, 2026, is something far bigger. A controlled dismantling of the very structure that has governed global money for the past 80 years. And almost no one is connecting the dots. As I record this from Asia, silver is trading at $73.57 an ounce. Gold sits at $4,712. Both are down this morning, silver off $2.20, gold down $35.20. The headlines will tell you this is about conflict. They'll point to the Strait of Hormuz. They'll show tankers, warships, satellite images, naval formations. And they're not wrong, but they are dangerously incomplete. Because the real battle isn't about oil. It never was. It's about who controls the flow of that oil. And more importantly, what currency the world is forced to use to pay for it. That one question, which currency, is the entire reason silver is moving the way it is right now. That one question is why gold just ran for 3 straight weeks and only recently paused. And that same question is about to trigger a confrontation that every Gulf nation, every European power, and every major treasury holder across Asia has quietly feared for years. The first test is coming, not months from now, not next year, but within days, and when it hits, the precious metals market will never look the same again. So before we go any further, I need to be absolutely clear with you. What I'm about to show you is not mainstream analysis. You won't hear this on financial TV. You won't read it in the major financial papers. Because this isn't the narrative they're allowed to tell. Mainstream media is locked onto the military angle, because that's what drives clicks. But they're ignoring the monetary structure behind it, because understanding it requires a level of depth most financial journalists were never trained to explain. I've been tracking this exact shift since 2017, the connection between the petrodollar system, reserve currency power, and precious metals. And I've said this before, the move away from dollar dependence is not a theory. It's a supertanker turning. It doesn't turn fast, but when it does, the wake it leaves behind reshapes every coastline it touches. That turn is now completing. And what you're seeing today in silver and gold prices, those are just the first surface ripples of something moving 6,000 feet below. Stay with me, because by the end of this, you'll understand why the Strait of Hormuz narrative isn't really about Iran. It's about China. And that single distinction changes everything about where silver goes from here. Let me walk you through the analysis that reframes this entire situation. 2 statements. That's all it took on their own. They look like standard geopolitical moves. Routine. Predictable. But place them side by side and the entire narrative collapses. First, a full U.S. naval blockade, cutting off every vessel entering or leaving Iranian ports, a move already disrupting global oil flows and rattling markets worldwide. Second, an open invitation to China, bring your ships to us, we'll sell you oil cheaper. Now here's the part they're not telling you. China is the primary buyer of Iranian oil, and this blockade is hitting those flows directly, forcing tankers to turn back and exposing just how dependent that route has become. So when Trump says Iran, what he's really targeting is the pipeline feeding Beijing. Because for years, that oil hasn't been settled in dollars. It's been moving outside the U.S. system, beyond SWIFT, beyond sanctions, beyond Washington's reach. That's not just trade, that's a parallel financial structure. And this blockade, it's not about pressure on Iran, it's a message to China: buy from us, use our system, or lose access entirely. Redependence on the dollar. That's the real endgame. Because the moment China buys oil through US-controlled channels, everything resets. They're back inside the system, back using dollars. Back exposed to the same leverage Washington has used against Russia, Iran, anyone who stepped outside the line. Asset freezes, access restrictions, supply pressure. The tap can be shut off at any time. And China knows that, which is why they won't willingly walk back into that cage. This is where the risk turns existential, not just for the US and China, but for the entire global monetary order, and for every holder of gold and silver, because this blockade has only 2 outcomes. It works, or it fails. No middle ground. Either Chinese vessels are stopped in open waters, or they pass through untouched, and each outcome detonates something bigger than any Iran negotiation ever could. If the US intervenes, China doesn't respond with words, it responds with action, accelerating treasury selling, expanding naval presence, and pushing even harder into yuan-based trade systems already challenging the dollar's dominance. If it doesn't, the damage is just as severe. Because then the world sees it clearly, the system can be challenged. And once that belief spreads, every nation from the Gulf to Asia starts asking the same dangerous question. Why hold the system if it no longer holds power? The umbrella isn't holding. The security guarantee? It's theater. And based on intelligence coming out of the region, those nations already know it. They're acting on it quietly, decisively. They're selling U.S. treasuries. They're buying gold. They're buying silver. They're taking stakes in mining supply. This isn't theory anymore. It's active repositioning, and it's accelerating, because no matter how this blockade plays out, success or failure, the outcome is the same: pressure on the dollar. The only question now is speed. Without this context, today's moves in gold and silver look like noise. With it, they look like the opening move of something historic. This all traces back to a structural trap set in 1971, what economists call the Triffin dilemma. A reserve currency must run deficits to supply the world, and in doing so, it weakens itself. Every empire followed this path. Portugal, Spain, the Netherlands, Britain. All reached the same breaking point. The US has been there for years. What's happening at Hormuz isn't the cause. It's the symptom. China saw this in 2008. Since then, it has reduced treasury exposure, accumulated gold, and built an alternative system, one that no longer needs the dollar to function. In March 2026, Iran's parliament legalized a toll system through the Strait of Hormuz, and here's what should stop you in your tracks. Japan, a core U.S. ally, holding nearly $1 trillion in treasuries, used it. Japan paid. Not a BRICS nation. Not under sanctions. And yet it paid to move oil through waters once secured freely under the U.S. umbrella. That's not pressure on the system, that's structural breakdown. Now connect this to silver. Silver is not a bystander in currency wars. It's a beneficiary when those wars reach their endgame. Every reserve currency transition in history has driven gold and silver higher in the old currency. Why? Because when trust erodes, capital moves to assets outside the system. Assets that can't be frozen, sanctioned, or controlled. That's why nations are selling treasuries and accumulating physical metals right now. Silver at $73 isn't expensive, it's early. This morning's drop? Noise. Fear-driven liquidation as oil spiked and traders rushed to cash. But that rush into dollars in the middle of a credibility crisis is temporary. Because when it reverses, it doesn't drift. It snaps. This is the clearest confirmation yet of a pattern that has played out for centuries. When a dominant power loses control over a critical trade route, the sequence is always the same. Trust erodes, allies hedge, and capital begins to move slowly at first, then all at once. We've seen it before. Portugal, Spain, the Netherlands, Britain at Suez in 1956. Not the cause of decline, but the moment the world realized the system could no longer be enforced. That's where we are now. Replace Suez with Hormuz. Replace the pound with the dollar. The structure is identical. And when that shift begins, assets tied to the old system like treasuries start a long repricing lower, while assets outside it, physical gold and silver, begin a long repricing higher. So the real question isn't if silver rises. Structurally, that path is already set. The question is whether you're positioned to survive the volatility on the way there. Because transitions like this are never smooth. They are violent. They shake out the unprepared. And they reward only those who understand what's actually changing beneath the surface. A binary outcome is closing in. Either the blockade holds and risks direct confrontation with a nuclear power, or it fails and the credibility of the dollar cracks in full public view. Meanwhile, the signals are unmistakable. Gulf nations are selling treasuries and accumulating physical gold and silver. China has reduced its treasury share from 29% to 7.3% over 15 years. While stacking gold for 17 straight months, Shanghai has built a non-dollar settlement channel. China controls 75% of U.S. rare earth imports. Treasury yields are already at levels that strain economic growth. These are not coincidences. This is structural. So the question isn't whether to hold silver, it's whether you truly understand why you hold it, because that understanding is what keeps you steady when fear peaks. This is the real battlefield, not oil, not headlines, the dollar. And silver is how you hold your ground when the system resets.